Hello again, this is Alex with MasterChartsTrading.com. Today is Friday, October 7th, 2016. There's quite a bit of agenda we have for this week, so we'll look at stocks and its reaction to the employment report, look at junk bonds, look at the high-grade bonds and the muni bonds which may have broken support. We'll take a closer look at the Forex universe and dollar and its effect on gold and gold miners, and a possibility of a bear market on gold yet again. We'll look at oil and natural gas, and we'll finish off with copper. All right, let's start with S&P 500 ETF SPY, our proxy for the market. So Friday, the jobs report came out in the morning. We had a drop, then a rally, and then the stocks kind of ended the day near the middle of the range. But overall, I think, well, first of all, this is a bullish chart because we just hit all-time highs. So this is clearly a bullish chart to me. Now we had a pullback from all-time highs of about 3.5%, so that's kind of like a normal occurrence. But I'm referring to a range, a trading range, maybe from, from here, from 211 to about 217. And for now, looks like we're still within this about 2.5% trading range. My feeling is that the resolution out of this range will be to the upside. In other words, we'll break out of this range and close above it, and we'll most likely see new all-time highs sooner rather than later. The reason for that is because there was still a lot of interest in buying stocks. So the stocks coming down, but immediately they were bought, and in here we see buying, buying, buying. Here, all of this buying tails out of the bottom of the candlestick. So there's an interest in buying stocks, and I think again, I think we will resolve to the upside from this trading range. If we don't resolve to the upside, we could break 211 and head down. And, this could be like a mini head and shoulders. So maybe this is about, what is it, 3.5% or so. 3.5%. So we could potentially drop another 3.5%, which would put us around Brexit lows, which makes perfect sense. But again, I think this is a bullish chart, so I think the resolution eventually will be to the upside. QQQ, for example, never even came down that hard. It's at all-time highs. Even after this dip here in the beginning of September, it immediately turned around and made fresh all-time highs, and it's trading still next to all-time highs. So this is showing, strong appetite for risk again. Here's a longer term chart. One of my proprietary indicators, a market breadth index, turned bullish here in end of May of this year. So, basically before this I was looking at the markets as still in a bear phase, and now we're looking at this market from a bullish perspective, and I'm only looking to go long basically. S&P 500 stocks above 200-day exponential moving average and bullish percent index are well in a bullish territory and in a bull market territory. So I see nothing yet to even remotely worry about as far as major trend is concerned. So we're firmly in a bullish territory. Here is the weekly time frame for S&P 500. I put in the automatic support resistance. So, basically we came down from all-time highs to support, which was about 2130, 21, 20. Because you can see there was a bunch of touches here in that area, and finally a breakout. And then now we came down to that level to retest that level. So far this breakout and this retest has held. We could still come down and retest it yet again, and if, like I just showed, if we don't hold it around here, then we could break down and head lower, and I can show it in this chart as well. You can see it's about 3%, 3.5%, so we could head down lower to possibly the Brexit lows here. But for now, I see that this is still very much a bullish chart, and most likely we will have a bullish resolution to this so far very mild correction. Here is junk bonds, and the reason why I think that stock market is in a bullish phase is because of the junk bonds, and these are all-time highs. Junk bonds correlate very highly to the general market, so this could be like a leading indicator for the stock market. You can see that this correction in September, beginning of September, it was very mild, and then it immediately was bought, and we made all-time highs just this Friday. For junk bonds. So you can see the same thing in a weekly time frame. First of all, this is a rather unusual occurrence. We had multi-year lows here. In fact, this was like a 4+ year low just in February of this year, and then we had this amazing turnaround and rally to all-time highs. So as far as behavior of the stock markets and the securities in general, this is quite unusual. So but this is a bullish behavior, and all-time highs for junk bonds bodes well for the general market. You see the correlation between the S&P 500 and the junk bonds is very high. So this could be again like a leading indicator. If junk bonds are making all-time highs, maybe the stock market will continue higher as well. All right, moving on to bonds. So here we have all-time highs for TLT in this daily time frame from July. And if you listen to my previous videos, I repeatedly said that this is extremely overextended to the upside, and I would never buy up here. So we got a pullback, and we're getting still, the security is still being pressured. You can see we're making a series of lower highs, and looks like we just made a lower low relative to this low. Now we haven't made a low relative to this low or to this low, but right now looks like we are making a series of lower lows and lower highs. So we have to entertain the possibility that indeed these all-time highs are as high as bonds will ever go in the history of the United States bond market. This will only be known in the, so to speak, in the rear view mirror, but it is always a possibility. And as of right now, I'm still treating TLT as a bullish security, but this will obviously change if we get more support breaks. For now, we had this support break right here, which was relatively minor. But if we get major support breaks, like for example on a weekly time frame, so we are actually right now at support. The support is right there from this breakout around 133. So we are there, and this candle from this weekly candle is rather bearish looking. So we are there right now, and if we do break it, we could head down further to possibly 125 here. Now, at that point, we may entertain a possibility of a bear market in bonds. But right now, I still think that this could be like a bull flag or fallen flag. And if we get a breakout out of this fallen flag, then we can see all-time highs yet again. Here, the more diversified bond aggregate bond fund, AGG, also on a daily time frame, again, all-time high. So for now, again, this could be just like a flat consolidation, and I don't even see a major support break, honestly. I mean, this was right here, we just kind of closed this gap, and I mean, major support is, maybe here, because we can see a breakout here from 110 and then continuation higher. So there is support around here at 110, but for now we're still trading next to all-time highs, so we're not that far off from all-time highs. So it's possible we're just going to bottom out. In fact, you can see a couple of hammer-like candlesticks, so there is interest now in buying at these prices here. and we could see further gains in price. Here's that same chart, but on the weekly time frame, and there's that flat consolidation, weekly time frame. So a break below this low here, below this week's low, and a close, especially below 111.14, could be somewhat bearish, and we could see further correction possibly to around maybe here to 109 and change. Maybe at that point we will entertain a bear market in bonds. But right now I'm still thinking that this is a bullish security. Now, concerns do creep into the market, and here is the concern, and this is the municipal bond ETF. This could be like a tap-in pattern. In fact, this looks almost too perfect, like we have this level 112.89, 112.90, we had breakout, throwback, continuation higher, all-time highs, and then pullback, 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 and then we broke the support. And we broke the support, came back up to retest the support, and bounced exactly off of it. So looks like this 112.90 level is very important to this particular security, municipal bonds, and looks like we have not been able to recapture it. So if this is indeed the case, then we may have a support break, and this is more obvious on the weekly time frame. Here's that support break for municipal bonds, because we closed, below this lows basically. Let me make sure I'm saying correct. So the lows here are 111.94. We closed at 111.98, so we're slightly above them still. So we'll see if this is indeed a support break. If it is indeed a support break, then we could see further declines in municipal bond prices and possibly a correction to 110. Yeah, I'm not yet prepared to say that this is a bearish security, but if we get to 110 and don't hold there, this could become a case for the bear market in municipal bonds. And they all correlate quite well to one another. So all bond funds, except for junk bonds, correlate quite well to one another. So if this is a leading indicator, maybe next would be the AGG, and next could be the TLT, or vice versa. Moving on to the Forex universe, here is the US dollar on a daily time frame. So it looks like we have a breakout, at least above this recent resistance at 96.50. We had a close above this level. Now, next day here, it's kind of interesting because we came up here, and this only shows to, I believe this price is only to 1 p.m. on on Friday. So after the close, there was more pressure down. In fact, US dollar closed a little bit lower even than, I think it closed around here. And then when we get to gold, this will become more significant. The important thing is that the pound versus the dollar have dropped again to 30-plus year lows. So this clearly is helping the US dollar. Now, also the Japanese yen, I'll show Japanese yen. It's looking like it's topping out versus the dollar as well. So here's the US dollar on the weekly time frame. I think this is a bullish chart. We broke out here in 2014 and then hit 52-week highs, and we're basically consolidating over the past couple of years. And this could be like a cup and handle or a double bottom formation. If we break out above the $100 level, then we could see strong appreciation for the dollar, and vice versa. If we break down below 92 and around 91.80, 92 points, then we could see this whole bull market unravel. Okay, here's euro versus the US dollar, and again, this is up to 1 p.m. On Friday, and actually euro did gain in the final hour of trading, so it's not, this candle doesn't look as bad. So it's, again, euro is sort of just trading flat for the past few weeks. I think this is a bearish security long term, so we could see euro come up to this level and then fail, or maybe it has already done so. Maybe this was it. You know, maybe this was the spike, and now we're just kind of going sideways before heading even further lower, possibly to even below this level as well. Here's a British pound versus the US dollar. The big news here, of course, is that this is a 30+ year lows. A couple of weeks ago, I pointed out that we're, having a short-term bounce. We had this outside reversal, which is confirmed next week, and continuation higher rather. But then the week after, we just tapped out here with this shooting star candlestick, and it was an extremely feeble bounce. I was expecting the bounce to go to as high as like 1.38 or so to this level, but that didn't occur obviously, and it just turned around, unraveled, and made fresh 30+ year low. So this is a bearish security, and this is exactly what happens in bearish security. If you're trying to look for bottoms in a bearish security, you will get this kind of thing. So if I was trading this on this time frame, I would only be looking to short it, and I would be looking to short it around 138, but it clearly didn't get there. So fresh 30+ year lows. And here is the US dollar versus Japanese yen. Again, I think this is one of the more interesting charts out there. Looks like we are holding in this level at around 100 level, and we're just not dropping any lower. In other words, the yen is just does not want to appreciate. In fact, last week we had a hammer-like candlestick. This week we continued higher. So it's possible we have held support here. We have repeatedly touched this area, and there's a lot of support in this area now. And if this is basically a bottoming pattern, and if we turn around, continue higher, then this will be indeed a bottoming pattern. And again, if I go on a weekly time frame for the US dollar, currency of baskets, then Japanese yen, reversing from 52-week highs will certainly help the US dollar. British pound is already at 30+ year low, so that's helping the US dollar. And then if the yen joins in, then we could see even further price appreciation for the dollar. And if euro turns around, that would be extremely strong move. So this level will become very important if we get there around 100. If we break out above that level, this could be extremely bullish for the US dollar. And finally, we get to the topic everybody wants to know about, and that's what's happening with gold. So, big support break here, pretty obvious to the naked eye and to the untrained eye, or pretty much anybody else here. This is a big, big drop here. Basically, I think it has to do with the dollar. The dollar strengthened just like I showed, and gold is, inverse dollar on steroids. So, this is what happened. Now here, this chart doesn't tell a full story. You can see here the close from end of June was at 12, rather the low from June was 1252.80, and the close here was 1251.90. But the thing is that this was a close before the after hours. In the after hours, you could see that there was a little bit of buying, and in fact, this candlestick turned green here. So this candlestick, this low from the 24th of June, Friday actually did not close below it. So according to this chart, at the very least, I don't see a close below this low. Now, if we just go by this chart, then we have a support break of this level as well, and next support could be around 1200. As I said, gold is inversely related to the dollar. When gold goes up, dollar goes down, and vice versa. When dollar goes up, gold kind of goes down. But occasionally there are forays into the positive correlation where both gold and dollar move in the same direction. In fact, as of late, we had a foray into positive territory with both dollar and gold kind of moving sideways to higher. Now, I think we're basically getting back to the normalcy, and now gold and dollar will do their normal thing, which is moving in the opposite direction. So if I'm correct and dollar will strengthen further, this will absolutely weigh on gold. Here are some of the levels to watch. This is a weekly time frame. Clear support break here from $1,300. The reason why $1,300 was important is because there were multiple touches of that level in the past. So, for example, here's a touch right there in February of last year, another touch right here in May of this year, and finally a breakout here in June of this year. Then we had touches of that area again on several occasions before finally breaking it this week. Now this level at 1200 I think is a line in the sand, and if we break below that, we could be back to retesting the lows achieved during the bear market in gold. In fact, here's a long-term view of this security. One of my proprietary indicators here is gold breadth index. Whenever it goes below this red line, I consider it a bear market, and we need to get above this green line to go back into the bull market. So this indicator would have worked perfectly for this entire bear market, and all of this rallies were basically bear market rallies that should have been shorted. Here now we have the opposite. Right now, as of right now, I still think that this could be a bull market for gold, especially if dollar weakens somewhat, and the turnaround could still happen. Alternative scenario, of course, we could do something similar to what we had here. Let me go back 6 years, in fact. You can see that we had similar thing. We had this indicator was at 3, and then it dropped more, and then finally it dropped into the bear market. But you can see that we had a pretty strong rally here before it ultimately rolled over into a vicious bear market, basically. So right now there is still a possibility we will hold support and turn around, but the more we stay in this downward trajectory, and especially if we break below 1200, the less likely that will become. So in fact, let me show you GDX. This is gold miners ETF on a daily time frame. So last week I pointed out this bearish divergence, and the reason why it's bearish divergence is because the price was making higher lows here, while the underlying market breadth indicators, for example, advanced decline line, advanced decline volume line, and unbalanced volume, were making lower lows. You can see it in here, from here, from here, and from here. And then finally we had this particular divergence did resolve to the downside. They don't always do that, but this was a strong divergence on all three indicators, and we did resolve to the downside and corrected back down here. Now, right now we have a bigger bearish divergence. If we say that this May low to, basically this Friday's low, you can see that it's still a higher low here. But on the longer term, the advanced decline volume line is already below the May low here, and the unbalanced volume is as well below this low here. So we have kind of like a bearish divergence here again. You can say that the same thing for the bullish percent index is that already we made a lower low in bullish percent index. But I think the important thing is here that it is now very it's very low. It's only 17% of the stocks within GDX are on a point and figure buy signal, which is a bullish percent index. And this kind of smells of a bear market territory. So this could be already like a first sign that we are not going to be making higher highs and higher lows, but we may actually unravel completely, and these are all-time lows, well, back here. So yeah, I wish I could give you better news, but if we don't hold here at around 21.90 here for the gold miners, but the important thing is for gold, if it holds here at 1200, then it still has a chance. But I don't see it having a strong chance if we unravel below 1200. Then maybe we'll even take out this low from last November. Great, moving on to the hard commodities. This is West Texas Intermediate light crude oil on a daily time frame. So we're basically at resistance again at around $50 or so. Maybe this is already a bearish engulfing pattern, and maybe we'll turn around and head lower. But I mean, there is still some, significant resistance here at $51. So maybe we'll spike again and then roll over. Here's Brent. This one is more, it's a little bit more, even closer to this resistance, pretty obvious resistance here. So selling already came in on Friday, and this could be like an outside reversal, definitely a bearish engulfing, but we need confirmation in the next few sessions. So for now, there's resistance up here. Of course, we could also break out above it and continue higher. Anything is possible. Here's a weekly time frame, and the same thing, 50 some dollars. There's resistance here from previous peaks, and this was it rolled over here in May of this year, and we're back here again. Possibly we're gonna roll over. We'll see where this goes. It's possible we're going to break out, but I just don't see why would that happen? Because there's just a glut of oil, and all of those calls for production cuts from OPEC. I'm not sure how much it amounts to. Plus, the important thing is there is a lot of resources from the United States producers that are just kind of waiting for any kind of higher prices. They can just come online and roll the prices lower again. So I honestly don't see it going much higher from here. Okay, here's natural gas. Daily time frame. These are 52-week highs, and I said that we're most likely going to break out the 52-week highs. So I was treating natural gas as a bullish security and only looking for bullish setups. And this is a good looking chart. As usual, there is no such thing that this charts that just go up in straight lines, so there could be another pullback, another meandering sideways, and then we maybe break out to fresh 52-week highs. So the important thing is, I think that this is a bullish security, and natural gas has turned around. We made lower lows, turn around. There was important $2.50 resistance from multiple touches here, support break, a touch, and then finally a breakout. So at this point, I basically turned bullish. Let me see where it was, in June, July of this year. So there's that breakout right there. So I turned bullish, and I was only looking for bullish setups, and looks like we are now getting a follow through to the upside. So I said that this high here, this is the high I'm referring to. It's about 17% down, depth of this pattern, and we're already starting to see a result of that. So we're about 7% up from where the pattern is. So this breakout above this low, it's already about 7% up, so we have another 10% or so to go, and most likely what will happen is we're gonna get to this lows here and this gap, and this is where the people will start taking profits. So to summarize, natural gas is quite bullish in my opinion, and I think we will see follow through higher. Of course, nothing works in a straight line, so we'll see some probably meandering sideways and then another breakout. And let's finish off today with copper. I don't know if I show this chart to my grandma or my mom or anybody, pretty much they all say that this is going down. So I sometimes hear that people are looking for a bottom in copper prices. I have no idea if this is a bottom in copper prices. It could be that we're gonna just continue lower. But for now, what I see is a bunch of lower lows and lower highs. And so far, I see maybe possibly a couple of higher lows, but no higher highs yet. So this is a triangle consolidation, going back a year and a half or so. You can also think that this could be like a flat consolidation because there's no higher highs. So I guess at the very least we need to break out of this trend line and close above this trend line. I don't see that's happening just yet. But I think ideally a breakout above $2.30 or so, like above this level here, a breakout, consolidation, retest, and maybe a continuation higher. Because right now I just still see a bunch of lower lows and lower highs, but we could turn around and then start making higher highs and higher lows. But for now, it's still a bearish security to me. Anyways, if you like what you're hearing, take a look at MasterChartsTrading.com and please stay tuned on how to find us on the internet and for information on how to sign up. Thanks a lot. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now. So please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the successes in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trailer services. Bye-bye.